Hello, everyone. Welcome to Smart Investing. Today's video is going to be about the banking sector, and this is the end of the banking sector. This is going to be the last stock I will be going over for you guys. Today's stock I have is ticker symbol CCNEP. Right now, markets are closed. It is June 5th, so let's go ahead and go over this stock. I'm so glad to be ending this sector. So let's look at the first page. Looking at the numbers, they look okay. 52-week high and low could be better. Market cap is at 49 million. This is definitely a stock that Wall Street does not like because of this very low market cap. Looking at the chart, let's look at the 5-year. You can easily see it's almost breaking into new highs. A lot of these charts are going to look the same. Even from 2023 and beyond, because we had this drop most of the year, and then towards the last 2 months of 2023, there was just a buying spree, even up until now. So we're already 8 months into the continuation of this supposedly bull market, and now we're pretty much reaching new highs. So with the new highs, it hasn't really broken extensively, meaning it hasn't broke, that much, just slightly. So, it's almost trying to continue it, but taking baby steps. It's just, doing double tops, triple tops. It's making slightly new highs, not like, explosive new highs. So anyhow, so new highs, a lot of charts look the same. Other than that, again, the stock is going to be pretty weak just because the market cap is really, really low. Wall Street doesn't like it. Let's move on to the quants. So looking at the quants, so income I don't agree with. Growth, I don't think so. Value, I don't think so. Quality, not really. I think in order for, especially the bank sector, for it to be quality, it needs to be a higher market cap stock, at least in the billions. Because Wall Street doesn't like stocks that are in the millions. I mean, that's just change to them. That's almost like an over-the-counter stock. They're not really into stocks that are, that low in market cap. They don't favor the little guy like that. So again, ticker symbol CCNEP. We're going to look at the financials, which this might take a little longer, but this is what it is. So you can see declining estimates kind of, stabilize a bit, trying to correct itself into that 80-cent range. And then the Q2 was a decline as well, and that was a miss. I don't know why it's not even showing Q1 for 2024, but again, that's all I have. Maybe it's because the stock is like horrible at reporting, or nobody's really covering it. Nobody really wants to cover it. You see his quarterly estimates, a drop in return on assets. So we went from 0.24 to 0.22. Then return on equity pretty much dropped. So let's look at the annual, which is more accurate. So we have ROA at 1%, which dropped. We have ROE that dropped. Earnings have dropped as well. Net margins have dropped 2%. Typical debt, about 90%. Then we have book value. Slightly went up, but it's still horrible. So I wouldn't say awful numbers, but slight declines. Slight declines. Doesn't look good. We have the net income at 58 million. So that's a pretty big drop from 63. Revenues at 223 million. Looking at the cash flow, at 47. Investing is 150. 218. So they do have positive cash flow. I'm not sure if they could cover the dividend based on the amount of shares, but again, 44 cents for the dividend, and they have not given a raise at all for the dividend. It's been at least since 2020. So there was a drop of 3 cents from 2020 to 2021. And then 2021, we have 44 cents. And then basically the last 3 years, the same amount of dividends. So for this stock, is it a good stock? I'd say no. Do not add this to your watch list. I wouldn't say it's horrible, but it's on, the downtrend. So, nothing exciting about this stock. So that's all I have for you guys. Thank you guys for watching. I'll see you guys in the next one.